So today, economic data report came in very strong, and we have seen that core PPI came in zero point 0.9, you know, exceeding forecast of zero point 0.2, and as well beating previous data. And we have seen unemployment claim coming in at a discount of 1,224K filing for unemployment claim. And today, data print spurred a risk aversion, and traders are digesting it, coupled with inflationary reports, which Federal Reserve are putting up together. I believe that the strong PPI figure today have raised concern about increasing inflationary pressure in US, and it makes near-term Federal Reserve interest rate cut less likely as we march into September. Every trader was like speculating, oh, September comes in, rate cut, rate cut. But from data coming in from the producer price index, core PPI, it came in very strong. I think that's the strongest data since we've had since 2022. And we are not going to sweep it under the carpet. So the Federal Reserve will be digesting the data, and we most likely act on those economic data. And Sergeant Report has made it very clear in his remarks multiple times that rate cut will be based on the data dependent approach. So they will continue to put in data, core PPI, PCE, you know, interest rate decisions, and every other things will be based on all the information gathered. So all these things are what we expect from Federal Reserve. And if you look at the price of oil, oil has been dropping after I sent a chart on oil sell. I think that was 3 days ago. I sent oil charts based on our proven strategy that has been backtested multiple times, and the result is the same. So let's dive straight into the structure of oil. And we have seen oil create a resistance structure here. RS1, resistance becomes support and breaker structure. And we've had another RS, that is the second one, resistance becomes support and breaker structure, giving us a descending trend line, DTL. And oil return back, another resistance becomes support and breaker structure. So the three touches have given us a descending trend line, and we have seen price surge in the month of June when we had Israeli-Iran conflict, and the threats and all that happening in the Middle East. And we have seen oil surge and the price subdued. And from the bottom, that constitutes our supply roof. That constitutes our supply roof, acting as a dynamic resistance to upswing. So you see, in the future, every time oil price escalates, it get capped by that descending trend line. So what that means is that we are waiting a breakout. So if you are anticipating that the price of oil will go up, it has to break out from that descending trend line. That descending trend line is a motion of selling. Every time you see it, it tells you what a global energy demand is all about. So every time price comes there, they sell. Every time it comes there, they sell. Every time it comes there, they sell. So let's look at the demand floor and look at a line chart on critical. You will see that we have here as RS resistance becomes support and breaker structure. And shortly after that, we broke that structure and we return here as a recent return in this level, a break and retest, and price has formed a ROT slash SR. And shortly after that, price return to give us another beautiful SR level. So what become resistance and breakup structure, and as well a retest candle to a broken structure that have been tested once and is tested a second time, and that gives us a descending trend line. So that descending trend line has become a litmus test for us that in the future we are looking for a breakout from that structure. And look at what happened when price returned here. We have seen it, and in the month of April, when price returned, it found support on that structure, on that descending trend line touch. That is the third time, and price returned again in the month of May, and oil price have left, and we are still holding oil buy. We're holding oil buy at a very high, at a very low rate, and when I called for this, we entered another oil sell at this level, and I think at the moment, if you see that oil price has created a strong demand floor, and that demand floor seems to be keeping price, so I will change the color to blue to put into perspective. We have here as SR support become resistance on breaker structure one, support become resistance on break of structure 2. And if you look at it on your line chart, you will see acting as a cap for oil price, stopping price from a further downward slide. So let's put it into perspective. And you see what price did there after double touch. So we came back, though we didn't get to this point, but we broke that structure. What structure was broken? To SRO level, SRO1, SRO2, break of structure, price returns here on retest, and we have sold down. We sold down into 54. And when price came back, it respected it. A broken demand floor becomes a supply roof 1, supply roof 2, supply roof 3, supply roof 4, break of a supply roof, price turns on demand. Now oil price has found demand today. So if you look at it critically on the structure, you will see that oil is beginning to rise. And while I've called for a sell on this ascending trend line, you will see a structure here where we have RTRS1 and we have a break of structure followed by a retest, making it a demand floor, and price has gone on to form an M structure. After price has formed that M structure, this is an M structure. You will see it on daily time frame, and you see price has broken out from the neckline and retested one, retested two. On the second retest, the break of the neckline of that M structure, you have seen that oil got rejected at a higher level, and you have seen oil drop significantly from $70 per barrel zone, and we have seen oil retrace into $62 per barrel. Now oil is beginning to pick up again. That seems to be a benchmark descending trend line for oil. So oil is respecting that structure. And what I want to see is that oil will continue to rise from where it is, except there's a breakout from that descending trend line acting as dynamic support to downswing. So if oil respects the structure, then we could see on technical that the oil price will rebound. Yes, because the geopolitical tension is subsiding. The tension in the global system is gradually coming down. Tariff negotiation ongoing. So most likely that trade balance will be struck. But at the moment, I think the only conflict we're having now is the Ukraine Russian conflict, which I believe will still be resolved. But if that's not resolved, I don't see it impacting the energy market. So I think at the moment, let's see um, how market follows this structure, and we'll be looking it and to see that this analysis stands. Except we break out from this descending trend line, a breakout from this descending trend line will call for a retest of our previous support structure, and you see price come down again around $51 per barrel. So if we break out from there, ladies and gentlemen, brace up for more oil sell. Yes, you have to brace up for more oil sell. So if we break out from there, then most likely that oil wants to come down to this descending trend line where I look out for buy opportunity in line with the strategy and principles of Shavyfxhub. Shavyfxhub wish you a very successful trading session as we're marching into Sydney. Whereas from Sydney, we're moving into Asia. From Asia, we're moving to London. From London, we're moving to New York, where we expect volatility in the market. As you start the day strong, start the day resilient, start the day believing in yourself. You are not small. Every trader is a good trader, but it's not every trader have mindset. So be a trader with mindset. And I will borrow you one mindset today, the mindset of a hunter. Think like a hunter. Think like a hunter. Bye bye.